What if I told you that a bank once operated in more than 70 countries, handled billions of dollars, and was later described by investigators as the bank of crooks and criminals? And the most shocking part, at that time global AML rules didn't even exist. Welcome to Scam Diaries. Today banks talk about KYC, transaction monitoring and suspicious activity reports, but there was a time when none of this existed. In the 1970s and 80s, money could move across borders with very few questions asked. No global AML framework, no coordinated supervision, and very little accountability. This gap gave rise to one of the most important banking scandals in history. In 1972, a new bank was founded, the Bank of Credit and Commerce International, better known as BCCI. Its founder was Aga Hassan Abedi, a charismatic banker from Pakistan with a bold vision to build a global bank for the developing world. BCCI grew rapidly, faster than most traditional banks. BCCI was not based in one clear location. It was registered in Luxembourg, operated largely from London, and had major financial backing from Middle Eastern investors, including Abu Dhabi interests, and operated in more than 70 countries. The structure was not accidental. It made the bank everywhere and nowhere at the same time. No single regulator had full control. On the surface, BCCI looked like a successful international bank. Behind the scenes, it was something else entirely. Investigators later revealed that BCCI used shell companies and nominee shareholders, hid its true ownership, maintained parallel books, and deliberately avoided transparent oversight. The structure allowed illicit money to move freely across the bank. BCCI became a preferred channel for drug traffickers, arms dealers, corrupt officials, and politically powerful individuals. Not because of weak AML controls, but because AML controls did not exist in any meaningful form. This was a failure of banking governance, not regulations. Even without modern AML rules, the warning signs were visible. No one could clearly explain who truly owned the bank. The group structure was intentionally complex. Profits appeared without clear economic logic. Regulators relied on each other instead of verifying independently. Everyone assumed someone else was watching. No one truly was. By the late 1980s, journalists, investigators, and policy circles were raising alarms. In US Senate, investigators and intelligence discussions, BCCI was informally referred to as the Bank of Crooks and Criminals. This wasn't a slogan. It was a reflection of how deeply criminal networks had penetrated the bank. In 1991, the truth could no longer be hidden. BCCI was shut down worldwide. Over $20 billion were lost. Depositors across continents were affected, and confidence in global banking supervision was shaken in 1991. Regulators faced serious public criticism, and this was not the collapse of a single institution, it was the collapse of trust. The BCCI scandal exposed a dangerous reality. Global banking had expanded faster than global regulations. No shared standards, no coordinated supervision, no visibility into beneficial ownership structure. BCCI didn't break AML rules. It proved why such rules were desperately needed. In the years that followed, regulators began focusing on beneficial ownership transparency, cross-border regulatory operation, information sharing between authorities, and the foundation of modern AML framework. BCCI became a case study taught quietly but remembered deeply. AML was not born from foresight, it was born from failure, from banks that were trusted too easily, from structures that were never questioned, from warnings that were ignored. And that is why Scam Diary begins here.